whether you look at the Taiwan index, the Hang Seng, the Kospi, that's the South Korean index, all of them are managing to hold on to gains.
On Monday, when we were not trading, the dollar had fallen sharply against majors, against Asian emerging market forex, and that kind of continued last night in the US session as well. So about 1/3% higher on the Nifty, 25,250 is where we are at. The Nifty Bank is up about 0.5%, I think, 59,200.
Looks like the earning outlook is looking better, earnings are stabilizing, and FY 2027 should be a good year for earnings growth for the market as a whole. We are looking at about 17% growth for the Nifty 50.
So Mr. Ajit Pawar, Deputy Chief Minister Maharashtra, no more, passed away in a plane crash in Baramati earlier this morning. Sometime before 9 a.m.
No expectations. Maybe we keep hearing that they may do something on long-term capital gains for some FIIs.
President of India, Draupadi Murmu, arriving for her joint address to the Parliament, and this comes at the start of the budget session, just 3 days before Finance Minister Nirmala Sitharaman will present her union budget on Sunday.
Whether that is infrastructure, consumer, all of those stocks are going to be in focus. But earnings, as for now, dominates. The markets, broader markets, seem to be back in the game.
Sterlite Technologies, it's a big surge on that one, locked in upper circuit, up 20% as we speak. Mahindra Logistics is the other one, seeing gains of around 14%. We do have Hindustan Copper. The copper rally continues.
Okay, well, that is the day so far. And oh boy, the volatility on the index is just quite amazing and really quite something to behold. You literally there was 25 points on the index about 15-20 minutes back. Then there was 150 odd points. Now there is 50 points. So the ticker tape is changing very, very fast. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel and Rima with me. Guys, hi. Afternoon.
Hi, afternoon. So the intraday high on the Nifty was closer to 25,400, 25,372 on an intraday basis. And that was a level, both Mitesh and Sudarshan had pointed out, from which the markets could reverse. And we've seen profit booking take place. The high was hit somewhere around 11 o'clock. Still holding up in the green. Mid-cap performance is a lot more heartening. Yes. So adding on weight from yesterday's rally, and the advanced decline ratio stands at 3:1.
Well, that's the big takeaway for me, that at least the breadth of the market has improved. We have got slam back, and today, after a while, you have the mid-caps actually that are outperforming what the frontline index is doing. Both the small cap and the mid-caps, they're doing better than what the Nifty as well as the Nifty Bank. So that's why portfolio is feeling good. Some of these stocks have fallen a great deal, but currently they're pulling back equally as swift. We have ACC's numbers that are at the bottom of your screen. It's ACC's consolidated numbers. Remember now, it's going to be merged with Ambuja Cements, and it trades at a big discount, because always there was that fear that it's going to get folded up into Ambuja Cements. I think the numbers, on the top line as well as the bottom line, more or less in line. The EBITDA number, well, it appears it's a bit of a miss. It was expected to be soft, but the margin is even softer than expected. So keep in mind, but for ACC, the problem is there's a lot of intercompany sales. So that's why now analysts look at Ambuja Cements on a consolidated basis, because it's very difficult to analyze, the reported numbers from ACC and the other subsidiaries. The stock has been a big underperformer, and it continues to remain, sub that 1,700 odd mark, which is actually much lower than replacement cost on an EV on EBITDA. It's the cheapest stock. But as I said, parentage is with Ambuja Cement. So if you want to play Adani Cement, you'd rather look at Ambuja Cements. That's the way the street looks at it.
Broader markets, of course, Nigel, is the story. But I just noted down, what we've done on the Nifty, right? If you can, the intraday basically will tell you the story. So we opened at 25,370, and that was the high approximately. A point here or there. That is the opening high. Then we fell 140 points. By 10:15, we were at 25,230. Then, in the next hour, we jumped back 130 points again to 25,350. So that was 11:30. 150, we fell to 25,190. That is 150 point down. And now we are essentially about 60 points up from that low level. So 140 down, 120 up, 150 down, and now about a 60-odd point bump up. So, it's like a very, because positioning is on the long side so light and markets so heavily short, I think it's being, the index is bobbing around like a like a ball which is being thrown around. So 60, 67, 70 odd points is what you have. But the heartening fact, I think, as Rima and Nigel both said, market breadth is positive. Almost 3:1. So 3 up for every 1 down. And it's a really wide swath of stocks which are doing very well. How should you position yourself is the question. Mitesh Thakkar is with us with that answer for you. Mitesh, good afternoon. Good to have you here. Your thoughts in terms of index trades, and then we'll get to stocks.
Good afternoon, Prashant. So yeah, actually, we did get a bounce back as I was talking yesterday, and I said getting past 25,400 could be a challenge. And I think we got a high around 25,370, 75 zones. I think overall the market, remains also but weak. So it could be some kind of a choppy move between 25,000 broadly and 25,400. And a break on either side would, suggest further movement in that direction. But the overall bias for me as of now is on the negative side. So I am looking at more of shorting positions as we get close to about 25,400. On the stock side, I have one buy and one sell. Bharti Airtel is breaking down, so sell there with a stop about 1961 for targets of around 1900. And HAL is buy with a stop below 4509 for targets of 4625.
Okay, defense is clearly the sector of the day. We should pull up the India defense sector. And Bharti is down nearly 8% since the start of the year. It's been a rank outperformer for the last 5 years, but seeing some profit booking at higher levels. And with today's fall, it's dipped below the 200-day moving average. Bharti Airtel 1.5% down since the start of the year, 8% lower. But let's quickly touch upon the numbers that came in from the auto pack. So starting with TVS Motors, which was a strong set of numbers. The company's revenues went up 37%. This was driven by a volume growth of 27% and a realization increase of 8%. Margins came in at a multi-quarter high of 13.1%, aided by a better mix. There were more premium two-wheelers, three-wheelers, exports in terms of the mix, and plus the rupee depreciation. So 13.1% margins versus 11.9% on a year-on-year basis, ahead of expectations. Profits went up 52%, lower than estimates, but impacted by the Labour Code, which hurt the bottom line by 41 crore rupees. There's a conference call at 3:30 where the street will watch out for the outlook on volumes, domestic and exports, any update on ABS implementation, and the price action following an increase that we've seen in raw materials. The other one is Maruti Suzuki. And before we get to the numbers, pull up the intraday chart. Maruti Suzuki, post the numbers, fell 4.5% and now has managed to recover. It's still settling, finding its feet. Stock now is down 2.5% off the lows when it was down 4.5%, 5%. But it's once again, slipping off. Numbers look fine. The company's revenues went up 29% on a year-on-year basis. This was again driven by a combination of volumes increase of 18% and a realization jump of 9%. But realizations are actually lower on a quarter-on-quarter basis. The stock initially fell because of a margin miss. The EBITDA margins for Maruti were lower than estimates at 11.2%. It missed consensus expectations and declined 80 basis points on a year-on-year basis. But this was an account of a higher one-off expense which dragged the margins, an account of gratuity long-term compensation. If you strip that off, ex of one-offs, margin performance is better. And that is the reason why even the profits came in lower than consensus expectations. So that is Maruti. But earlier in the morning, there was also some news on Maruti where I think Bloomberg had reported that South Africa is considering imposing tariffs of up to 50% from vehicles from India and China because it wants to protect its domestic industry from a flood of imports. This is what Bloomberg had reported. And for Maruti, while exports are not very large, South Africa is one of the top export markets. So that's the reason why since morning, the stock has been subdued, but now is trying to find its feet on the back of the numbers. So Maruti down 2%, TVS Motors up. Mitesh, you want to comment on the technicals of any auto stock which stands out? Yesterday, we had M&M, which was down nearly 5%, and today big moves seen in both these names.
Yeah. So, for me, I think M&M is a stock which is showing signs of weakness. While the stock has managed to bounce back from lower levels, I think, yesterday or day before yesterday, the closing was around 35.50, and yesterday we got a closing of about 33.90. And today we are just kind of holding around those levels. There's a weekly average, which comes in around the levels of 33.88. Once we start closing below that, I think the stock should complete a breakdown, and I would look at a target of 3,200 to begin with, and in a slightly negative case scenario, even 3,070. So the overall setup is negative. On the upside, I think, it will be very difficult for the stock to get past anywhere close to about 3,500, 3,510 levels. So I think, if the stock comes to 3,470, 80, again, I would be on the shorting side. Similarly, for Maruti also, it's recovered from the intraday lows, but the weekly charts are slightly negative, which means that this pullback will most likely fail to get beyond 15,250, 300 zones. And I think there's still a chance of the stock heading towards 14,200 to about 14,100. So negative view there as well.
Okay, all right. Got that, Mitesh. I think we have Mayuresh Joshi who joins us on the show. Hi, Mayuresh. Good afternoon. Good to see you in. Maruti is the stock that we're talking about. Initially, it did see a sharp downtick. It was down close to 4% actually, and then it recovered into the green. Your take on the numbers and the view on the stock?
Afternoon, Nigel. No, I think numbers specifically on the operating front, a tad bit of a miss. Now, is that because of the commodity costs remaining a tad bit higher? And if that is the case, I think as we head into Q4, because base metal prices have gone through the roof over the past few weeks, whether it's copper, aluminium, to a certain extent, steel as well. I think that can probably have some element of an implied impact as far as input costs are concerned. When it comes to the overall volume growth, I think the expectation largely getting built in is with the structural GST changes and the product category that Maruti services, right from an entry level to the hybrids. I think they've got a good mix as far as both value and volume in terms of engine capacity is concerned. No two ways in terms of the dealer and distribution network. However, what kind of an impact does higher input costs have in terms of elevated prices going ahead, not just for Maruti, for the industry as a whole, and how much of an impact will it have on margins going forward? It's something to be seen. The second aspect, obviously, the one-off in terms of the wages and the revision of the wage bill has an impact, but that should largely be missing from Q4. However, I think with the EU deal, I think there is some element of circumspect going around in terms of how cars might get flooded. But again, Maruti is in a sweet spot as far as those markets are also concerned, because even the extremely high premium cars or variants are not a very significant proportion in terms of causing a dent. And how much does it actually have an impact is something to be seen. So I think a tad bit below, as I said, on the EBITDA front, but I think commentary on all these aspects will be closely watched out for me.
Yeah, no, absolutely. Just pull up these stocks, right? We'll talk about BEL numbers which came. So actually, why don't we address the numbers first, and then we'll have a slightly bigger discussion on defense. But Ria, tell us the numbers. I mean, numbers look good. They were a beat, at least on an EBITDA level.
Well, yes, a very strong set reported for BEL, and it's a beat across the board for the company this time around. The revenue has gone up by roughly 24% versus the estimates of 17% growth that we were working with, and this is led by healthy execution of a very strong order book of roughly 73,000 crores for the company. EBITDA and net profit have also seen increases of 28% and 21% respectively, well above the estimates of 14% and 12% growth that we were working with. EBITDA margins have also expanded by roughly 100 basis points on a year-on-year basis, and the Street was actually expecting the margins to contract by 64 basis points this time around. And the better profitability in this quarter has been led by lower other expenses as well as lower employee costs for the company. Material costs to sales are roughly at 54% in this quarter versus 52% that we saw in quarter 3 of last year. Order inflows, if you look at those for 9 months of FY26, they stand at roughly 17,500 crores, which means the company has already achieved roughly 65% of their regular OI guidance of 27,000 crores for FY26, and order book, as I mentioned, also stands strong at 73,000 crores. Now, going forward today, we have the earnings call at 4 p.m. So we will be watching out for updates on orders for subsystems for large projects like the 97 LCA Mark 1A aircraft, Uttam radars, export orders, QRSAM, as well as the Akash NG missile systems. And apart from this, we will also be watching out for management commentary on the order pipeline as well as execution improvement.
No, absolutely. Thanks very much for that, Ria. Appreciate it. Stocks up 8%. And I think half of those gains, maybe a little more, has come after the numbers came through, just a little before 2:30. But it's not just BEL, right? I mean, if you can pull data patterns up, let's just look at the stock. It's up 13%. There is BEML, which is up 9%. Solar Industries is up 8.5%. Mazgaon Dock, if you can quickly pull these up. There you go. That's BEML. Solar Industries, we should put up. Mazgaon Dock, we should look at. Midhani is up 7%. MTAR Tech is up 6%. Bharat Dynamics is up 6%. Cochin Shipyard is up 6%. HAL is up 5.5%. Zentech is up 6%. Garden Reach is up 5%. Paras Defense is up 5%. Astra Microwave is up 4%. And by the way, these are all part of the Nifty Defense Index, all these names. And of course, the index itself is up 6%. For the week, and we've just traded 2 days. Monday was a holiday. I mean, the Nifty Defense Index is up 8%. Of course, I mean, it's coming off beaten down levels. But Mayuresh, is this the, in a way, the clearest set of expectations one can have? I mean, one doesn't know about anything else, but at least with everything which is happening in the world, I mean, I think the bet is that the government will spend, substantially, at least budget a substantially, higher amount of money to be spent on defense. And I mean, if you believe that, what's the best way to get exposure here?
Prashant. No, I think no two ways about it. I think the expectation is that in terms of a budgetary allocation for the sector as a whole, I think it should be a bump up from last year's budget as well. And that probably seems to be the need of the hour, looking at how geopolitics is probably shaping up. And therefore, I think with an increased allocation expected to take shape and place, the kind of orders that can come through over the next few quarters can be quite significant. It's not that these companies are sitting on meager order books. Order books are already very sufficient enough for a whole host of defense players. I think the revenue visibility of the book to bill is sufficiently covering for the next 4 or 5 years, to say the least. But I think the orders in terms of both execution and the niche capabilities that are expected to come through, specifically in terms of the dynamics and then the dynamics of warfare that is changing, I think the margins should be relatively better, and the timelines in terms of executing these orders will be very well defined. Therefore, I think better margin orders, better execution will probably mean a working capital cycle should be better off for a majority of these players. Obviously, in a quarter or two, you're probably going to get those one-offs happening for a whole host of these defense companies. But I think the sector is buzzing, and you're absolutely right on expectations of higher allocations translating into higher orders with better margins. Expected to create stronger earnings visibility going ahead.
So, while the overall capex expenditure in the budget is going to go up 10, 11%, for defense in particular, the expectation is 20 to 25%. So, Jeffries goes on to say it could be as high as 25%. So, I'm just reading the note. We expect the defense capex to rise to 1% of GDP by FY31. As of now, it's 0.5%, similar to levels 4-5 years post the Kargil war. India's defense spends are lower compared globally and thus have headroom to rise. And across the board, the expectation is the defense capex will be meaningfully hiked in the upcoming budget. But just a quick word on CSB Bank, Catholic Syrian Bank, if you could get that up. You remember they came out with a pre-quarterly update and the stock got very excited with the gold loan portfolio. The gold loan portfolio went up by, I think, 40, 45, 50% roughly in the pre-quarterly update. Now we've got the actual numbers and there is a meaningful increase in the company's NPAs, and that may have disappointed the street. So gross NPAs now stand at 1.96 versus 1.81. Net NPAs stand at 0.67 versus 0.52. So asset quality has deteriorated in the internals that we have of the numbers. We still don't have the NIMs, but that stock is reversing. Post the quarterly update, it had spiked, and today you are seeing a decline of 15%. Mayuresh, CSB Bank?
Hi, Rima. Afternoon. I think solid set it was expected to be, but what probably happened in terms of the delivery that they gave a quarterly update and what actually came through, I think the street probably is a little bit disillusioned by the whole impact. However, I think going forward, I think within the mid-cap private sector banks per se, I think the large part of expectation is going to be deposit accretion. I was hearing the Karur Vyasya management where Mangalam had conducted an interview yesterday after the results were out. the management is very confident, and therefore part of this private sector banking space, specifically the mid-sized ones, I think the deterioration is largely behind us. Asset quality pressures are looking far more stable as we speak, specifically on the net NPA front. And therefore, I think deposit accretion is going to be a key factor for the industry as a whole, and specifically for mid-sized private banks, because if they have to maintain their run rate and maintain the run rate in proportion of the larger ones, I think their expectations of deposit base actually improving with interest rates actually normalizing and falling as we speak are expected to be a little bit of a tricky situation. Therefore, I think one really needs to be a little bit choosy within this space. I think a few of the banks within the private sector space, the mid-cap private sector space, have delivered a good set of numbers, as I said. Karur, DCB Bank has a decent set of numbers. So in my opinion, I think anybody holding these should continue.
Okay, Mayuresh, we'll leave the conversation here for now. Thank you very much for joining in. On the other side, Jitendra Shriram of Baroda BNP Paribas Mutual Fund will be joining in. Stay tuned.
Jitendra Shriram is with us of Baroda BNP Paribas Mutual Fund. Jitendra, good afternoon. Good to have you with us here. Markets back up 110 points, so which means we're at 25,284. Essentially, that is another 120 odd point jump from where we were at 150. So lots of 150 point moves today from the open. Jitendra, we were just talking about defense, and I just wanted your thoughts there. You know, it's the cleanest kind of expression, right? Of if I can call it that. One doesn't know what will happen anywhere else, but defense spending perhaps goes up with everything which is happening in the world. What's your sense?
I guess so. So if I were to look at the budget which is due over the weekend, I would probably suspect that given the major item heads of central government spending, which includes railroads, roads and defense, etc. If I had to bet on one sector that might actually see a big flip up, I think it would be defense, given that, world over you're seeing a much bigger push on defense spending. So this is something that, as a pure catch-up or, going by what your border countries are doing, we may also need to step up that. So that is something which probably makes a lot of sense.
How are you all positioned with respect to defense in your portfolio, Shriram?
So clearly there are certain names that we have directly on defense, which report into the Ministry of Defense, all the names, some of which have been flashing here. But also, I would say there are also a lot of proxy play available. Like, you have certain automakers, certain auto ancillaries also who do a little bit of work for defense, which is also some of the proxy exposures that we have in our portfolios.
All right. Hi, Jitendra. Good afternoon. Good to see you, Ben. But what would your positioning be right now? Because, yes, we're seeing a bit of a spurt owing to positioning. The FIs are short. The RSI was moving towards oversold levels. The PCR as well was down. But still, there is that bit of disappointment with regard to earnings, not yet picking up to steam, though it's hopeful that it will pick up. The FI sellers selling does continue. And one wonders whether the retail will have that patience. So at current reckoning, how would you position yourself? Would you deploy money? Would you still hold on to some ammunition?
So if I were to look at broad earnings color till the last weekend, whatever has come out, about 140 odd companies that reported, I would say the numbers were hovering around the mid-single digit. But having said that, some part of it was this exceptional cost item because of these new labor code provisions. So to an extent, if I were to back of the envelope make an adjustment, I would suspect that we are trending somewhere close to our real GDP growth, somewhere in the high single digit kind of a mark in terms of earnings. Now, clearly one sector that has been on a tear for the last 3 or 4 months has been the metal space. And I think the contra positioning of it, that the user industries are seeing a little bit of disappointments, whether it be auto sector, whether it be consumer electricals, whether it be, even some parts of capital goods, especially the industrial segments. We are seeing a little bit of margin pullback there, which is coming through. So I would say that is an area where we would have taken some money off the table. Metals is clearly an area. And if I were to broaden the spectrum, I would say more of dollar sensitives is an area where we have added on to, whether it is tech, whether it is metals, etc., which are proxy play on the rupee dollar benefits starting to kick in. That's an area we have added on to.
No, got that. Just maybe look at a few other things, right, which are moving around sharply. There is defense, of course, we've discussed. Tejas Network, occasionally it gives these, the trend has been, it's just been a secular fall, but once in a while it just makes a sharp 10-15% kind of a move higher, and then that's it, fizzles out. We've seen many, this many times. The last big kind of move on the way up in what has been a declining, one-way declining trend has been, was late 2025, November 2025, when we saw a 15% move. Stock was at about 400. And then, of course, the recent low is closer to 300. But it's got very large volumes at this point in time. What else? There is Electra Green Tech, which is coming up with a very sharp 10% move. ABB is moving up about 7% at this point. MCX is another one, right? I guess that's another proxy for all the activity in gold and silver. So MCX is up another 7%. So it's basically at a new all-time high. So stock exchanges, of course, have not had it all good, but commodities, absolutely kind of different picture. I just hope, and I'm not sort of preempting anything, but there was some chatter about, because that segment has done so well, maybe the government looking to maybe get some more revenue out of that transaction tax there, the CTT. But as I said, it's not expectations, but there was some chatter some time back. We'll have to see. But that, for something like M6, which has done so well, that will be significant. That's what's going on. CG Power, of course, we've been highlighting on the back of numbers. We've had the management with us earlier. We've got something like a Red Tape, which is up 14%. Sirma, which is up 10%. Actually, so many of these sort of single stocks which are jumping up on large volumes as well. And that's the reason why market breadth overall has been very, very solid in that sense. Something like a CG, Jitendra, CG Power, the transformer space. Any thoughts at all? Anything you like? Stocks have corrected quite a bit.
No, absolutely. So whether when we look at this entire electrical piece, I would say that we have seen meaningful corrections come through there. And to my mind, at least a large part of their backlogs should be, obviously there is a little bit of an impact which comes because, things like transformers, etc., are copper users. So to an extent, when you have a situation where just quarter on quarter, that is the third quarter, October to December quarter over the July to September quarter, you had a 15% dollar increase in copper prices. You're obviously going to see a little bit of pain point on the copper side. I presume a lot of these people would be hedging, whether on exchanges or otherwise with their sellers. So to an extent, I suspect that part of it will be mitigated. I think in some of these cases also, we are seeing some large lumpy orders come through, which are either on the export side or also on the domestic side. So it's an area we are structurally positive on because we are seeing a lot of shortages for medium and high tension transformers, both in Europe and the US. So to an extent, I think the business dynamic is still fairly optimistic. Although you may see a little bit of margin pullback in the near term just because of the sharp spurt in metal prices.
What's the sector that you're most bullish on, where the risk reward is attractive?
If I were to take a step back and see, even there are certain, if I had to just draw the color from September 24 till date, there are at least 300 stocks odd in the small cap space which have really crumbled. They're down like 45-50% and so on. So I would say there is definitely, when fear is very high, the fear gauge is prompting amber. There is definitely a case for looking at some of these bottom-up ideas because I'm sure that you will find a little bit of value picking now emerging. The valuation froth has drained off, so that is something that could definitely sound quite interesting. Other than that, I would say that, the entire power ecosystem is something we are very bullish on, whether it be the utility space or whether it be power equipment, both on the generation and transmitters. That's something we continue to stay very positive on.
Okay, all right, Jitendra, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate it very much here on CNBC-TV18. 150 points on the Nifty, 25,322 is where we are at. I mean, actually, the other space. I mean, actually, we've talked about all this stuff individually, but the PSU space, right? 1.5% on the Nifty PSU index. Actually, we should look at the CPSE index maybe, because 5%. Yeah, that really shows it. A lot of the defense names are also part of the CPSE index. And of course, banks are doing well. Oil, you got ONGC, Oil India. So really, that is, along with the defense index, the CPSE index, perhaps doing the best. It's also perhaps many of these are exposed to what the government may do in the budget. I mean, these are areas where the government has influence with regards to policy changes and so on and so forth. We were joined by Samir Arora talking about the budget, founder and fund manager at Helios Capital. And the conversation largely revolved around his sort of expectations. He's keeping, of course, expectations low, but especially with regards to equity taxation, these are some of his thoughts. Listen in.
No expectations. Maybe we keep hearing that they may do something on long-term capital gains for some FIIs, which may be defined as some endowments or universities or long-term, some X thing. So what happens is, if I keep thinking myself that it's so logical that long-term capital gains should be reduced, then I start believing it myself. So mostly my thinking is they will not do it. Debt and equity in India for Indian resident investors should be same or similar. That is wrong, because the debt guys, when they are earning that interest and on that they are paying tax, somebody else is offsetting that interest from his income and is paying less tax. It for everybody. Don't do it only for FIs. Just reduce for everybody to 7.5 or ideally to 0. And you change STT a little bit, because on the other hand, separately, we keep saying, although we own all these exchange stocks, that, the volumes are too high, speculation is too high. Just if you so want, or let it be for 5-7 years and then decide after that.
Okay, Nigel is standing by now. That is Samir on the budget, but positioning before the budget and how that is changing. That's the other big thing, because, I mean, the market's been swinging around like this because of the fact that it's been one-way positioned. Nigel, take it away.
Well, that's
How
right.
numbers changing?
Just look at the options data, actually, Prashant. We're talking about the markets being up close to 100 points. On the call buying, actually not making any money, because the IVs actually are come down. And that's why the 25,300 call, the premium actually is down by close to around 5% the last time I checked, at around 240 rupees odd. Normally, when the premium is so high as well, you'll get a sense that there is writing at those levels. So there is some kind of writing. We should get that strike up for you in the screen. On the downside as well, the 25,300 put, well, out that the premium has lost close to around 25% in today's trading session. So there is writing being seen at around the 25,300 mark, both on the call as well as on the put side. The important marks to look at, on the downside, you're looking at the 200 DMA, which comes in at around the 25,154. That's very, very important in terms of a first reference zone. The support comes in at around 24,900. However, in terms of resistance, 25,400, 25,450. That's the crucial resistance zone that we're seeing. And today, we almost got to around the 25,400 mark. Individual stocks that you're looking at, Asian Paints, that's the one that's seeing fresh shorting today in an otherwise strong market that ended under pressure yesterday. And today as well was under pressure, clearly telling you the markets don't like it. Many analysts thought the street was pretty much okay, but there are shorts getting built into the system. And oil is making a bit of a comeback because of that disruption that we are seeing in, in the United States. So you have Oil India as well as ONGC, fresh buying being seen on both those two counters. And that's why those stocks are holding strong. What's seeing some unwinding of positions? Well, Syngene, there is some unwinding that we're seeing on that particular counter. So net, the bulls will believe, well, they have a couple of 100 points left on the upside in this run itself. Let's see whether or not we can get to around the 25,450, 25,500. Then the bulls would like to make a bit of a dash to higher levels. Reference point on the downside, 24,900. Back to you.
Very interesting, Nigel. Thanks very much for that. So that's the F&O, information that you need to know if you're trading, because positioning is really, the head at this point in time. driving markets from one end to the other, and we've seen all these wild swings. Some news coming in from the HAL CMD saying, and this is coming through right now, to deliver 10 helicopters to Pawan Hans in FY27, that is the coming financial year. There is a bit about capacity at Pawan Hans, at HAL as well, targeting about 1/4 of our turnover should come from civil aviation in the next 10 years. And oh wow, that's quite something. Considering to make civil aircraft at Nashik or Kanpur unit. All interesting comments from the HAL CMD. We take a break. We are back. We'll get you a check on what's happening in dealing rooms with Nimesh on D Street Chatter. Stay tuned.
Welcome back. You're tuned into Closing Bell. A good follow-through session is what we are seeing. By the way, you have SBI Life that comes out with its set of numbers. The APA number appeared a little bit better than what Yash's poll threw out. And the value of new business as well, very measly better. But those numbers will go down as in line or a wee bit better than what the street was working with. Yash will be dissecting those numbers and join in. For the time being, hopping across to Nimesh. D Street Chatters with us. Nimesh, I think thumping the table and all, I don't know, but at least they're not crying now. They must be smiling.
Oh, absolutely. There is a bit of a smile back, Nigel. And this is exactly what we discussed yesterday as well, that the market was so extremely oversold that a technical pullback was on the cards, and that's played out yesterday as well as in today's market. So again, Nifty is back to day's high. Having said that, now watch out for the resistance level of 25,450 on the upside. That was a big support. Now it's turning out to a big resistance on the upside. So that's something to watch out for. Even from a flow perspective, the selling intensity has lowered a slight bit in today's market. I had suggested yesterday as well that for the last many days, a Middle East sovereign fund was a big seller. That selling seems to be largely over. Today there was a small basket which I think has got absorbed in today's first half. So it looks like that selling is largely over from that sovereign fund. Even the mid-cap index has rallied pretty solid in today's market. The index is up 1%. A lot of individual names have bounced back from extremely oversold levels, so a bit of relief rally there as well. I guess a bit of pre-budget rally is now playing out in a lot of the defense names, power names, as well as the PSU stocks. So maybe that momentum will continue until the budget. But at least from extremely oversold levels, there is a good technical pullback which has played out in today's market across Nifty as well as in the broader markets.
Indeed. What about stocks, Nimesh? I know most of the news flow is surrounding earnings, but what else have you picked up?
Well, a lot of names which are pulling back from the recent lows. So the first name is Delivery. Recent low of 370, 380, and now you've seen a bit of a pullback in that stock as well. I guess some bit of buying is back, and specifically one large domestic mutual fund has been accumulating at this level. So maybe a bit of buying support and Delivery. So a bit of recovery there. A couple of the other two names where specifically one particular mutual fund has been active buyer. That is Landmark Cars as well as Syngene. Syngene is still down from post the earnings. It was down almost 10% yesterday. Even today is down. But at lower levels, there is a bit of buying happening. And some domestic mutual funds are active as well in Syngene is from a flow perspective. So that's a couple of names. The third name is L&T. Even that has recovered from the intraday lows today. Largely because, as I said, a large sovereign fund was a seller. And part of that basket was L&T as well. Looks like that selling is largely over in L&T. So a bit of recovery in that name intraday. And the last one is Paytm. Even that's buzzing in trade today. The earnings are tomorrow, so a bit of a pre-earnings rally as well. But for Paytm, my sense is the city is anticipating some corporate development as well post-earnings. So watch out for any news if there is any post the earnings in Paytm.
Okay. All right. Thanks a lot for that, Nimesh. By the way, another stock that's come out with its set of numbers, I think, is Accutas. I think this is the erstwhile Amy Organics. Just pull up the intraday chart. It's a massive move that we're seeing on that particular name. I think there's Accutas Chemicals. Let's get it up for you on the screen. I think they're revising their revenue growth guidance from around 25% to around 30%. So explains why that's another stock from the broader markets that's suddenly seen a big spurt up. Now up 7% as we speak, holding really strong last 1 month as well as doing well. And last 7 days, as the chart is telling you, the stock is up close to around 15%. But there is a revision in the guidance, and that's why that stock is bursting away. Let's go back to Mitesh Thakkar from Bonanza Portfolio. Mitesh, you've got a couple of trading ideas for us. Help us.
Yeah. So, one is, IOC's stock this move towards the on-year day's high. That's a BTST with a stop at about 161. and target around 165 for tomorrow is quite likely. And the other one, which is reversing from extremely oversold levels, would be Keynes Technologies. Keep us covered about 34.65 and target of 35.50, 35.45 would be low for tomorrow.
IOC, and the other one is Keynes Technology. On oil marketing companies, the fear is in the budget that excise duty will be hiked. So most of these oil marketing companies are making handsome marketing margins on the back of the decline in crude prices because retail pump prices have not changed. So maybe the government could look at increasing the excise duty to shore up its own revenues. It could affect the marketing margins of oil marketing companies negatively. But PSU is clearly the sector of the day, and not just the defense names. Oil India, ONGC, 9.5%, 7% respectively. Look at GAIL in the oil and gas pack. Outside of that, an EIL is up 5.5%. RCF is a gain of 3.5%. A Concor is up 2.5%. So across the board, PSUs are on fire. In fact, let's talk about Oil India and ONGC. Because they're gaining in trade on the back of the rise in crude prices and the sharp rupee depreciation. Sonal is here to give us some numbers and analysis. Sonal?
Well, crude oil prices are at a 4-month high, and we are seeing a positive rub-off on oil producers like ONGC and Oil India. There are actually twin factors working for these stocks. The first one, of course, is crude oil price hike, which has come by, and that is after months of it being quite range-bound. Every $1 per barrel increase in crude oil prices increases EPS for these stocks by 1.5 to 2%. And the other factor is that sharp rupee depreciation that we've been talking about. So every 1 rupee depreciation also improves their EPS by 1 to 2%. So these are the twin factors which are working for ONGC and Oil India. But it is important to note that in calendar year 2026, the oil market is expected to be oversupplied by 1.5 million barrels per day. And that is something which could keep crude oil prices in check. The other factor is that oil demand growth may fall by 20% short of the past decade's average in the next 2 calendar years. So we need to watch out for that barring any geopolitical uncertainty that comes by, there could be some pressure on crude oil prices, or at least they could remain range-bound. Motilal Oswal in a recent note did indicate that Brent below $65 per barrel could mean that there could be earnings cut in the second half, and they flagged the risk of a sharp uptick in exploratory cost write-offs over the coming quarters for ONGC especially. This could be on earnings in second half of FY26, so these risks should also be kept in mind when we look at these two stocks. In terms of valuations, reasonable. ONGC is cheaper than Oil India, 0.8 times price to book, 7.8 times, 7.3 times in terms of FY27 PE, and Oil India at 18 times in terms of PE. But yes, these stocks are on our radar today.
Thank you very much for that. Dipan Mehta is now joining in for the last leg of the show, 15 minutes to go to wrap up. What's been a good trading session. The rebound from yesterday continues, particularly the mid-cap index, which is now approaching a 1,000-point rally. Dipan, hi, thanks for joining in. Anything in the defense pack that caught your fancy? Is running up too much ahead of expectations, or do you think we'll hear enough in the budget to justify the up move today?
Yeah, good afternoon, and thank you for having me on your show. I think, this defense story has been run over so many times. And sure, I think there'll be higher allocations. We want to get more spending done in defense. It's all about being Atmanirbhar when it comes to defense spending. And what we are seeing over here is pure and simple pre-budget buying taking place on the expectation that the allocation will get increased and the order flow at these companies will go up. But I think the preference, in my opinion, has to be with the shipyards, especially Mazagon Dock, where the order book position is looking a bit thin at this point of time. But massive orders are on advanced stage of negotiation. Valuations also are reasonable. So I would prefer to play Mazagon Dock as a defense play rather than some of the other defense companies where already, we have the kind of order book position and the order flow in place. So there's a surprise factor when it comes to Mazagon Dock because you can expect huge orders coming through in the next few months or so.
Dipan, stay on. The one sector which is dragging today is FMCG, and we had a chat with the management of Tata Consumer Products. Listen into what they had to say because stock is under pressure.
Guided for exit to close to 15% EBITDA margin, and we remain on track for that. 14.2 this quarter, which is up 60 bips versus last quarter, and 120 bips versus last year. Actually, if I add the negative of the US coffee alone, I'm at a 15% already this quarter. So having taken the price increases in the US, we remain confident of getting close to that number by the end of this quarter.
Asian Paints was a bit of a disappointing set of numbers. There were some brokerage downgrades also that came through. Listen in to what the management had to say about the outlook and the rise that we've seen in crude prices and how it impacts business for them.
One thing which we are committed in the industry going forward, that as a leader, we would like to kind of see that how can we really increase the demand, how can we really invest more in the brand, put more money in the innovation, and look at bringing more technologies into the system. So we would say that we will continue investing heavily into the industry as we kind of go ahead, and we would kind of like to maintain this band of 18 to 20% PBDIT margins.
Dipan, sharp fall in Asian Paints over the last 2 days, yesterday and today. And this is pretty much reversing all the optimism that we had post the Q2 numbers when the company had reported the double-digit volume growth. Your analysis on Asian Paints Tata Consumer?
I think first of all, they're extremely expensive. In Tata Consumer also, I was just checking 80 times trailing 12 month. Asian Paints still goes around 60 times trailing 12 month. For companies where the underlying growth now has gone down to high single digit and there's increased competitive intensity as well. So when you have a result in front of you, you do analyze what the valuation is. It's kind of a reality check as well. So keeping that in mind, I'm not surprised with the kind of move which we have seen over here. No doubt, I think they are great long-term stories and the fantastic companies have been great value creators in the past, but a good company necessarily will not be a good investment. And I'm not certain that Asian Paints or Tata Consumer are good investments at this point of time. One may remain invested because your price point may be very low, but to expect them to significantly outperform and create wealth from these levels, I'm not so sure.
Any stock that you've been buying recently?
No, Rima, nothing right now. Just waiting for the earnings season to get over. And there are many bets we had made in the prior earnings season, companies like Zaggle Prepaid and Sky Gold and BLS International and a few other stocks as well. But, we are waiting for the numbers over there. But by and large, I think it's just a wait and watch for us. And typically new ideas will emerge post this particular earnings season as well.
And post this earnings season, have you made any bets?
No, not yet. I think we're just waiting and watching. But I'm particularly impressed with the numbers that come through from a lot of these solar equipment companies. The valuations are extremely attractive. There is, of course, fear that the order book position may not grow as much as it has, and overcapacity coming into play. But I think that still there is chance for all these solar equipment companies to even deliver good returns from these levels. If the company which comes to mind, we can discuss with usual disclosure that we are invested or looking to invest is Fujiyama. It's a recent listing. It's a major player in the rooftop solar energy business, going in for further backward integration. And rooftop solar is very different from a lot of the other solar equipment OEM manufacturers, more of a consumer business. And we feel that that company has got very good growth prospects, a lot of government encouragement also for rooftop installations. And as far as that particular segment is concerned, we've hardly scratched the surface.
Fujiyama, the rooftop solar, I think it's the Surya Ghar, right? Is that the allocation under which the government is incentivizing?
There are lots of incentives at state level also, maybe you know more than me. All I know is that it's a focus area for the government, and it's got a great value proposition for the households who do put the solar panels on top. There's great scope for even commercial, to put in commercial premises as well. And it's not an easy business. It's not like setting up a solar equipment manufacturing company and then you do B2B. This is a B2C business. It requires extensive marketing, distribution, after-sales service. And when you compare Fujiyama's valuation, P multiple, price to book, to some of the other appliance companies, could be Havells India or could be Bajaj Electric or any of the other large, even air conditioning companies, it is trading at a discount. But I know it's a new listing. We don't have adequate history, not completely sure of their corporate governance standards as well. But I think it's worth taking a chance on a company like this. Again, a disclosure that we are positive on the company in the segment. Therefore, our views could be biased. Of course, other big players, two big players in this thing are Tata Power and Waaree Energy. Both these companies also, I think, are of interest to us.
Okay, all right. Dipen, stay with us. Let's go across to Vinny, who's joining in to help us analyze CG Power. That one, Vinny, is powering ahead. And today, the lone image of red on the screen could be Vinny, because the screen is green. Absolutely. Vinny, tell us more.
Absolutely, Nigel. The screen is green for CG Power today. Yesterday, they reported the numbers. It was not a great set of numbers, muted numbers that came in from the company. Revenue in line, but profits and margins were a miss. But let's talk about the brokerages. Now, the brokerage notes that came in this morning, UBS, they maintained the buy call, target price of 820 rupees per share. Nomura also maintained the buy call, target price of 820 rupees, though Nomura had cut the EPS target for CG Power by 7 to 9%. But they're positive on the overall growth outlook for the sector going forward, and CG Power also going forward as well. JP Morgan also, they maintained their overweight call, but they cut the target price to 698 rupees per share. They said that the demand, export, that's turning out well, especially on the international front, and entering into new markets is something that could maybe lead the growth for the company. US data center order, that was a big one for the company, and that is what they were positive on as well. Now, apart from that, we spoke to the management. We did have some commentary that came in here. The semiconductor business, which reported a loss even this time, they're making a lot of investments on this one, but they said that, in the near term, investments will continue, but they expect to achieve break-even very soon. Xero, which the company has acquired recently. So there the revenue started seeing an improvement. 120 crores is what the revenue contribution was this time. And they said that this company will achieve break-even by the end of Q4 FY26. Industrial segment, which was a bit muted and only a 9% growth, they said that they expect margins now to start seeing an improvement from here on for industrial segments, given that they've taken price increases, a lot of other factors that are working for them, and they're working towards reducing costs there. So industrial segment, that is going to start seeing an improvement in terms of margins. And other than that, export orders, that has seen a sharp jump up. Export orders do have slight bit better margins versus normal other orders. So that is something where they're focusing on, and that could be a driver for the company going forward as well.
Indeed, very bullish on exports. I think they said in the first 9 months of this year, exports went up 50%. Get into a break. Vinny, thank you very much for that. We'll come back with more.
Welcome back. Well, the markets are holding with solid gains today. Actually, a few of these stocks that have got bombed out, they have bounced back. Deepan, I'm going to name a few of these stocks. I don't know whether you like any of them. Tejas Networks, Tata Group company, the stock had become a third from the top. Tilak Nagar Industries, the sheet was very, very excited with regard to that deal that they announced with Imperial Blue. That stock, in fact, has bounced up. And also you have a couple of these other names like ONGC and Oil India. They haven't participated on the upside because of, feeble Brent crude pricing. But now there is some hope that, in fact, Brent crude actually has bottomed out. What's your view on any of these names? Bombed out names, but bouncing back today.
Tejas Network, I just can't look at so much of volatility in the earnings, and that's what keeps me away from it. You could have a blowout quarter, and then next 3-4 quarters go into loss making, and then also if you compare with its peak profits, it's not that attractive. So Tejas Network, you may trade in it. News may come. If you expect a good quarter, you may buy based on trading opportunity. But Tilak Nagar is an interesting stock. It's a kind of a high risk, high return stock. There are integration issues. And if Imperial Blue really they're able to extract the maximum out of it in terms of growth, revenue, profitability, then the entire complexion of the company will change and it will go to the next level from being a marginal player to being quite an important player in the alcohol industry. But also they have this entire litigation. I think Mansion House is the brand which is under some sort of litigation. And the outcome over there also is important, but it's a company we are tracking closely. Valuations are reasonable, very aggressive management, great track record. And if they're able to make this Imperial Blue a success, then I think you could have great returns for the next few quarters.
All right, just keep an eye on a few other stocks, Rima, from the broader markets. Kilburn Engineering, we had the management on Chartbusters a couple of weeks ago, and they were sounding very optimistic. The stock, got absolutely hammered. It went down one way, I think, from close to 600 rupees to 450 rupees. Today, they have announced a small order of around 60 crores, but on not very large volumes, actually. The volumes are just around 2 lakh shares. That stock has suddenly spurted up. Kilburn Engineering, that's the stock that I'm talking about. suddenly moved to the high point of the day. So keep an eye on that one as well.
Well, post-market hours, L&T will be reporting their numbers. There is a media briefing at 6 o'clock. Numbers typically come out between 4:30, and globally, we've got Meta, Microsoft, and Tesla reporting numbers. So Nasdaq, which was high yesterday, watch out for the follow-on action. But just counting down to today's trading session, Dipan, do stay on. The Nifty ends with closer to a gain of about 0.7%, a gain of 170 points. So adding on to the rally, yesterday the low on the Nifty was closer to 24,900, 24,932. So from that level, we've added on more than 400 points on the Nifty. The sensex also sees follow-on buying, gaining nearly 500 points. Mid-cap index was the big star. Mid-cap index up 1,000 points, 1 3/4 of a percentage point. On the way up, defense, oil and gas names all higher. It gets captured in the Nifty CPSE index, which was up 5.2%, and BEL numbers were also very strong, ahead of expectations. That got the stock excited. Eternal bounces back after the recent sell-off. So a 5% move on that. On the way down, it was Tata Consumer, Asian Paints, so FMCG was a drag. And Maruti numbers looked fine, but the stock ended with a cut of 2.5%.
Okay, all right. The real story actually was in the broader markets today. Plenty of stocks that did do well in today's trading session. Net, the bulls will be happy. Not just the expiry factor that played out yesterday. They have started off the February series on the front foot, though you'll have to say that we are bouncing back from extremely oversold levels. The crucial mark that you'll be tracking now is going to be that 25,500 odd, the crucial resistance mark. Well, we'll wrap up on closing bell, but you stay with us. Markets Forward comes up next.